Hey, crypto heads, let's take a look at the latest article on Brave New Coin, the 2020 Q1 quarterly review. I've been doing these past 8 quarters, maybe 8 odd quarters. It's been interesting to separate crypto based on traditional finance, the idea of quarters or business quarters. We've really started to know a behavioral change in price on the quarterly expirations. All the way back in 2015, 2016, when OKEx was first introduced, there may have been even a quarterly behavioral notice late 2013, early 2014. Typically, we see bullish Q4, bearish Q1, bullish Q2, bearish Q3, that sort of thing. That was the first step in recognizing, hey, there's a pattern here. Now that we have enough data, we have 10 years of data, and certainly not an N of 500, but it's big enough that we can break it all down. Now, obviously, if you weren't under a rock and you were paying attention to anything, you'll know that on March 12th, there was a large drop in price. This is a map of volume across all the exchanges. Well, okay, not all the exchanges, but these 5 exchanges here, mainly the higher volume exchanges against the BLX, which is this orange line here. And I like to look at this whenever we have a large drop to see, was there somebody selling a ton on Kraken first? Was there a ton of buyers on Stamp at the bottom? And in general, I don't see a lot of divergence here outside of the BLX, which is kind of the average, volume weighted average of these 4 exchanges and a few more. But there were no outliers here. The same can be said for ETH for the most part. Altcoins are generally a little more illiquid, in that you'll have buys or sells at certain places on the book that you don't see in other places because they're just, the order book itself isn't as robust on every exchange. So you can see there's a lot of selling on Bitfinex here at 155 or whatever this was. There might have been a price, a bid wall there, something like that, that kept it up. And then after that, it was just, it kind of looks like a Jackson Pollock painting. There was just volume all over the place on all these exchanges. Again, just the idea of illiquidity on alts is much higher than on BTC, and BTC isn't exactly super liquid either. And then if we look at Ripple, so this is the XRPLX in the orange here against these 4 exchanges. And it's funny to see how illiquid Kraken specifically is, just based on the volume bubbles here way below the index. It probably went even below 12 cents. But even if we look back at the BLX, there were derivatives exchanges at below 4K. There was some price action below 4K even on BTC's spot specifically. So looking at the quarterly, just the dates themselves, again, in general, it's either usually represents a high or a low for the quarter, typically follows a pattern. It's typically binary. You typically don't get both a higher high and a lower low from the previous quarter. It's usually either one or the other. This quarter, Q1, was definitely not what typically happens. You typically don't see a higher high. This is a higher high from the previous quarter and a lower low from the previous quarter. You don't see that historically. It just doesn't happen. It's almost always down or up, usually not both. So it was a bit of a crazy, volatile period. Mainly the legacy stuff, in my opinion, really brought us down. The correlation was extremely high between crypto and legacy across the board. Alts just got slaughtered more so than BTC, as what typically happens, again, in part due to the increased illiquidity of altcoins. So if someone's trying to get out of a position and they're selling and there's no buyers, it just goes to zero. And that's what happened on the Link. It was either Link BTC or Link USD on Binance. It had a flash crash to zero. And you see this stuff, it's pretty common because the books just aren't as robust as BTC or just normal liquidity. The other part of this is many market makers got obliterated on this drop. So market makers are people who generally pad the book on both sides, in that they give people a reason or a way to buy and sell on the order book. They're typically incentivized to do this on the exchange, so they get their cut. But in general, this helps keep liquidity high so that people can sell or buy into stuff on the order book. On this drop for BTC specifically, on the derivatives exchanges again, these market makers just got blown up. I mean, there's really no other term for it. So as we start this quarter, in general, we picked up quite a bit, towards the tail end of Q1. And again, at the beginning of Q2, which historically is crypto's best quarter all across the board, we've picked up quite a bit over these past few days. Comparing crypto again to everything else, this is mainly US focused, but there's also the Nikkei on here, oil, gold. In general, you can see the indices, global indices started falling off the wagon late February when this coronavirus pandemic really started picking up. And then on March 12th, crypto really had its down day. And ever since then, crypto's tried to diverge ever so slightly from traditional indices, traditional markets. The correlation is certainly decreasing. I think the correlation overall is still pretty high as far as what we see in US session, for example, typically spills over into crypto. So last night, ES or futures was incredibly bullish. BTC was incredibly bullish. We broke up. The US session today, the SPX is up 7%, something like that. BTC had a nice follow through to the upside, so did ETH, so did a bunch of alts. So we're still pretty highly correlated. And here's a measure of that correlation on the bottom here. This is SPX versus BTC, 30-day rolling correlation. You can see it's not 100% anymore. It certainly was. It's closer to 70, 80% at this point. So again, this correlation is coming down. It's still extremely high. Historically, over time, you can argue we're uncorrelated. There's not long periods of positive or negative correlation. If we look at another metric, I like to look at the VIX volatility index or the fear index. So this peaks when legacy markets are extremely volatile. And in general, anything 40 or above on the VIX has been a pretty good bottom for BTC price. This obviously didn't last here in February 18, but if we look at the VIX now, it basically hit an all-time high since 2008, just as crypto bottomed thus far. Now, this isn't to say we're not going to see a lower low, but so far the pattern is holding pretty well. In general, the VIX wants to go to zero. It wants to continually decay, and that's what we're going to need to see in order for crypto to have some sort of bullish continuation or bullish consolidation, I think. So to see the VIX coming down day over day, definitely more bullish than bearish. To see the correlation coming down on BTC versus SPX, more bullish than bearish. Looking at the quarterly price changes, again, historically, Q2 has been the best quarter. We've had data since 2011. The highest negative period was 6%. Q1 historically has been mixed, but mostly negative, as has Q3. Again, like I mentioned in the open, it's typically binary, typically bearish, bullish, bearish, bullish. We've never had 3 negative consecutive quarters, again, pointing to the high odds of Q2 in a vacuum being bullish. We'll see how that pans out. And another thing to mention, we have halving in a couple days here. 30 to 40 days, something like that, estimated. May 14th, May 18th, somewhere in there. So it's coming up. BCH and BSV also have a halving in the next couple days. There may be some interesting games with the hash rate moved back and forth there. But in general, even ETH, we don't have as much data, but ETH has been bullish Q2 since beginning of inception for trading for ETH. That's not to say we'll be bullish again, but it is surprising, as much as ETH dropped in Q1, it still closed positive. Now it was up, 2x from the bottom, something like that at some point. But another thing I'll mention is the modes for these quarterly changes on ETH are pretty tight in that there's typically, if it's a positive quarter, it's typically 10% or less. Here. This is 15, whatever. The negative quarters are typically at least 30%, averaging 35%, something like that. And any positive quarter above 10% is typically 100% or more. So it's hard to be bearish in a vacuum looking at this data simply based on history. Past results don't predict the future, but again, Q2 should be bullish for ETH. Now looking at Ripple, it's all over the place. You can see there's no specific pattern. Its positive quarters are extremely positive. Its negative quarters are extremely negative. Q2 has been more bullish than other quarters, excluding the 6% Q4. It's had three positives, 2 negatives, but it's all over the place. It's mixed. I'm less bullish on Ripple historically in a vacuum than I am on BTC and ETH. All three of these are based on the BLX, ELX, and XRPLX, Brave New Coins indices. A lot of people always ask me about alt season. Josh, when's alt season? What do you look at for alt season? Or is it alt season? Alt season is when altcoins do really well relative to BTC. Historically, any alt season we've had, so any increase in alt market cap, has been when the Bitcoin dominance, which is what this is, this white line this is a percentage here on the y-axis, has been below the 200 daily moving average. And you might think it's silly to put TA on a Bitcoin dominance chart, but hey, it's pretty valuable. Looking at May 18, that's when ICOs peaked. Ever since then, BTC dominance has held essentially above the 200-day moving average, except for Q1, where alts had a good run, and then as there was a flight to safety out of alts into BTC, into Tether, into other stablecoins, there was just a massive decrease in altcoin market cap relative to BTC. Going forward, it's probably pretty mixed. I think it's unlikely that in this quarter, Bitcoin dominance breaks below this 62% or whatever the low was here. But it's not impossible, just because Q2, again, has been the most bullish historically. Really depends on what happens in the macro world with the coronavirus, that sort of thing. Just looking at Tether has exploded over the past year, specifically USDT on ERC20 or on Ethereum. It's dominated every metric that you can look at it. The reason it doesn't dominate average transaction values is because it has a lot of transactions that aren't as big as the transactions on Binance USD and Huobi USD. So these two have relatively little transactions, but high values for their send. So overall, that's why it looks like it does. Another thing you'll notice is just the sheer number of new stablecoins that have popped up. Certainly BUSD and HUSD are smaller. They don't have much on-chain data, I think because they're mainly kept on Huobi and Binance themselves for the most part. But to see Tether rise up to 6 billion plus is a signal to other exchanges that, okay, maybe we should get on this bandwagon, get on this horse, and have a competitor here, which is good for the crypto space as a whole, because if Tether ever collapses, there are always others that can pick up the slack immediately. Looking at USDC, it's currently at all-time high as far as supply. You can see its supply is smaller than anything on Ethereum, Omni, or Tron as far as USDT is concerned, but it's the highest non-Tether circulating supply. So USDC has done quite well as far as being integrated on many exchanges, being audited regularly, yada, yada, yada. It's not necessarily the crypto lovers stablecoin, but it functions very well in its job. And lastly, let me just also mention for Tether, I've been tracking the top here is Tether in the red line versus USD. People always say, the peg isn't $1 or whatever. That's nonsense. The market value fluctuates. Surely, as you can see here, it goes above or below $1 all the time. This is the BTC price here. Since the March drop, Tether has been above $1 and it's stayed above $1. To me, this says there's a large demand for Tether. A lot of people are moving away from BTC into Tether. So as there's an increased demand, I think we're going to keep seeing increases in Tether supply as we've seen over the past couple weeks. The Tether printing has been honestly pretty insane over the past few days. So I don't expect us to go super bullish until we see Tether actually drop below $1 because that signals a drop in demand for Tether itself and an increase in risk on type behavior into BTC. Now, if you just look logically, this trend just doesn't make sense leading up to 2020, because as Tether was below $1, we were bearish. And as I just said, we're We're bearish here. Tether's above $1. What's going on? So I don't know what the breakdown is. Logically, what was happening, pre-2020. Because after January, we were bullish here. We were below $1. That makes sense. Demand for crypto's high. Demand for stablecoins should decrease. We're bearish again. We're above $1. Demand for stablecoins is up. Demand for BTC is down. That makes sense. But previously, none of that matched. So I don't know what that's about, but all I know is right now, logically, it makes sense. So the trend is your friend until the end. This is just another signal I'm watching, like comparing correlations to legacy markets.